Title Debasement Trade, what $126,000 Bitcoin and $3,900 gold are telling us. You ever opened your fridge, pulled out a half carton of milk, and thought, might still be good, only to take a sip and realize time doesn't play fair? That's the US dollar, folks. Smells fine in the abstract. But one taste in the real world, and your savings curdle faster than you can say consumer price index. Flint West reporting, how we got here. A fridge full of rotting promises. The American economy has been running a tab with the future for decades. It worked fine, so long as the tab stayed small, the bartender kept pouring, and no one asked for the bill. But the numbers no longer whisper, they scream. In 1981, debt to GDP was a manageable 31.2%. By 2008, it had climbed to 68.2%. In 2020, the pandemic hit and we rocketed to 130%. As of 2025, we are sitting on $37 trillion in federal debt, with a debt to GDP ratio of 122.1%. This isn't just accounting bloat, it's a full-blown perishability crisis. The US dollar, once the world's freezer of long-term value, now functions more like unrefrigerated meat in a sunlit window. Looks okay, smells okay-ish, but time, inflation, and unsustainable debt are turning it rancid. Bitcoin and gold, the vacuum-sealed alternatives. Enter Bitcoin and gold, assets with no central issuer, no obligation to dilute, no White House press secretary explaining away the mold. Gold is at $3,900. Bitcoin is at $126,000. These aren't just speculative spikes. These are price-tagged panic buttons. They're how smart money is trying to exit the perishables aisle. The MicroStrategy playbook, dollar in, Bitcoin locked. Now let's talk about one of the great financial jujitsu moves of this era, Michael Saylor and the MicroStrategy maneuver. The company raises dollars from investors hungry for yield. Instead of storing those dollars in melting buckets of bonds, they convert it into Bitcoin. The result? MicroStrategy becomes a Bitcoin vault with a public ticker. But here's the kicker. Institutional investors, especially pensions, banks, and funds, often can't hold Bitcoin directly. Compliance, mandates, and regulators make it a no-go. So what does MicroStrategy become? A proxy pipeline, a synthetic exchange-traded fund before the exchange-traded fund, a regulatory intermediation layer between the legacy system and the monetary exit ramp. They've made a business out of custodying courage for those who can't take the leap themselves. The debasement trade is the new default. When Citadel's Ken Griffin says he's worried about the run from the dollar, you better believe the horses are already out of the barn. Griffin calls it a debasement trade. That's polite. The truth is, the dollar's store of value function is inverted. Every day you hold it, you're signing up to lose something: time, energy, optionality. So now capital, institutional and sovereign alike, is trickling into harder, colder assets. Assets that don't apologize for existing. Final thought. The store is closing. The US dollar used to be a savings vehicle. Now it's a spending incentive, a coupon with an expiration date. The incentives have flipped, and the markets are beginning to price that inversion in real time. The dollar is a melting promise. Bitcoin is a freezing truth. And gold? Gold's the elder statesman, watching the madness unfold while sipping from a goblet carved in 3000 BC. Flint West signing off.